Let's talk about the interplay between earnings and guidance. And when a public company reports earnings, there are three outcomes that can occur. You can either beat the guidance that you previously provided, you can meet the guidance you previously provided, or you can miss. Those are the three outcomes associated with an earnings release. Now, once you've reported those results in an earnings release, there are 5 actions a company can take regarding forward guidance. The company can raise, the company can narrow at the high end of the range, the company can maintain, the company can lower or narrow at the low end of the range, or finally the company can reduce or lower guidance. Those are the 5 actions you can take around your guidance once you've reported the quarter. So now let's get into this idea of what the 5 guidance actions signal. And before I go there, the special situation is when you withdraw guidance. This is very rare and only happens when some big issue has occurred with the business. So let's get back to the idea of what are the 5 guidance actions and what does it signal? Well, raising and lowering are what we call outsized indicators. They are used when the company needs to communicate a significant positive or negative change to expectations in short order. And the reason that these are outsized indicators is that company valuation is going to change the most when you raise or lower that guidance range. Now, narrowing the range is more of what we call a controlled indicator. And the reason is that using a narrowing of the range allows you to change expectations over multiple quarters, whereas raise and lowering is sort of a in-the-moment, immediate expectation of change. And it's a controlled signal about future expectations. And the idea is you can either narrow at the high end or the low end. And what does that narrowing look like? Well, narrowing at the high end means you are now making the midpoint and the high end of your previous guidance the range, or at the low end, you're taking the low end of the previous guidance and the midpoint and making that your new guidance range. Now, when you maintain the range, that is the least volatile. That's the least amount of change that occurs because you're not changing anything. So expectations should stay stagnant. Now, the key here is unlocking value lies in knowing how your current guidance relates to current consensus. If your guidance is below consensus, the stock is probably going to go down. Expectations need to come down. If your guidance is above consensus, the stock is going up because expectations need to go up. A public company always needs to understand how its plans on forward guidance relate to the current consensus and where they want that future consensus to land. If you're not following those 3 components, you're not going to unlock shareholder value and you're going to have a lot of angry investors. Thanks for watching.